Hello financial investors and welcome to the channel. My name is Brent and today we're going to go over a quick post I posted back on the 10th of March 2020. Today it's currently the 11th. I wanted to make this video very quickly kind of going over my post, why I decided to kind of post this, also go into covering some of the Facebook discussions that I've seen. So if you are brand new to the channel, have not yet subscribed, I would really appreciate it if you do hit that subscribe button below. If you do enjoy this video, find it helpful, entertaining, definitely give me a thumbs up. And if you have any comments or questions at all going over anything in this video, the stock market, dividends, real estate, personal finance, drop it into the comment section below. I do read and reply to all your comments, and let's go ahead and get into the video. So I posted this about 14 hours ago, kind of going into my general thoughts, going into what is currently going on here in the market. So this post was just designed to provide my insight and my thoughts. So I've seen a lot of discussions over in Facebook groups, down in the comment section of multiple YouTube videos on different content creators channels, and over different forums such as Reddit, and I believe there's a couple other ones that track, Robinhood, M1 Finance, and such. And I've seen a lot of discussions of investors going out there and specifically saying that they are loading up on OXY, Exxon, General Electric, Ford, Wells Fargo, and the list goes on and on and on as to all these individual stocks that these investors are buying after they have fallen by X amount. And for example, I flipped over here to Dividend Growth Investing. This is the private group over on Facebook. Anybody can join. They have a couple questions, but I think it's time to be buying some GE. He could be kidding here, but as we kind of scroll down through what this one is currently offering, they talk about possible dividend cuts. The CCL, that's Carnival Cruise, Oxy cut in their dividend. So it's pretty informative as far as what they kind of discuss. But then we have some of the newer investors talking about ticker symbols in the mid 11s yielding 11%, and obviously that's a very high risk. Other investors are talking about rest in peace oil, massive dividend cuts coming out to the oil. Some investors are talking about bonds. Um, a lot of investors, let's see, I can find a few of these possibly, but a few of them just kind of throw out different ticker symbols as to thinking about dipping into some Carnival Cruise. What do you think? They're not really sure themselves as to why they are buying the investment that they're buying. So they come to these groups over on Facebook or some forum or below a YouTube channel, and they ask the channel creator or they ask the group overall to kind of get some backing to their cause, to their investment. So JPM or Pru, and they kind of create little different areas there and kind of discussing just different things. Wind resorts hitting some lows. So kind of going back to here, I've seen a lot of discussions going over just everywhere. Even on YouTube, I can probably pick out a few areas where investors are buying into single stocks. And I think we'll kind of go on into the next area, but I've also seen mentions of just, one stock you're looking to double or triple down on. And there's a lot of comments out there in the comment section of just maybe not the best advances for your capital. So my thoughts have been on the way up here in the market, as this market was moving day after day, just moving higher and higher with really no ceiling in sight and really not a whole lot of issues in its way. At that time, I think it was a great idea to start to target individual stocks that you've had time to research, you've had time to go over their financial fundamentals, their balance sheets. You've written down your reason for investing in the long term. Now, here in the short term, all these stocks are getting beat up. A lot of investors are diving into these having not really done a whole lot of research. They're going into the forums, Facebook groups, and asking about them just to get a better sense of, whatever their better sense of their actions that they're going to be taking place. So on the way up, that's when you should have been doing individual research on companies that have been beat up here in the short term, but overall are undervalued gems that will potentially move and recover up with the rest of the market. And while you buy it low and the market's trending higher, there's that chance that there'll be increase in their earnings per share, they'll be increasing the revenue, they'll be bouncing back as these markets are moving higher. And during that time, when you're just kind of averaging in when that stock is beat up, you will get the dividends along the way, and you will also get price appreciation as that company does get found as investors begin to buy into it, as investors begin to kind of see that it has been beat up in the short term, but its earnings per share has been increasing quarter after quarter into the good times, and that stock recovers. Well, I think, in my own thought, I think that this time may be over here in the short term very soon, and you may want to kind of change your approach of how you want to invest in the upcoming future, just because there's no longer going to be any hidden value out there in the market. There's going to be some sort of stocks out there that are obviously going to be valued or undervalued, but when you're investing and you're looking at the total market itself, it's going to be down off its highs by, right now I think we're down about 15%. It would take us another 30% gain to come back to where we had already been at some at highs. So if you have $100 and you lose 50% of that $100, you're down at $50. If you go up another 50%, you're not at $100, you're at $75. From $50, you now have to make a double gain. You basically have to make 100% of your return in order to come back to your $100 mark. So right now the market lost 15% here in the last few weeks. That means that 15% is what you lost. It takes 30% or basically all of 2019's returns in order to bring your portfolio back to where it had been just a few weeks ago. And of course, if your dollar cost averaging down, it's going to take a little bit less capital gains just because you have more equity that's going to be earning you a higher return. It'll just kind of get you there a little bit faster. But so the next one is kind of on the way down. So in the upcoming weeks or in the upcoming future, the stock market as a whole will be trending down. And in this sort of a market, you want to best protect your assets, not by focusing on individual stocks, by investing capital on exchange traded funds or ETFs, basically the same thing, that track the market, the total market, or something very closely that follows the S&P 500. And the reasoning for this is that if you're investing in single stocks here, as I kind of posted a little bit of, you don't know where the bottom is. Investors are diving into ExxonMobil, they're diving into General Electric, they're diving into Ford, they're diving into Carnival Cruise, they're diving into, all sorts of individual companies. And if we do go into some sort of a recession or just period where small, mid, large cap companies just are not able to increase their earnings per share, they're not able to meet their revenue, they're having to decrease their guidance for their revenue, their net income, their earnings per share. You don't really know where a lot of these individual stocks will kind of fall and bottom out to. You don't know how long it'll take to recover, or if they'll ever recover, if they'll need to get bailed out, or if they will get a bailout in the next cycle, or if their dividend will get cut. So I did post a dividend cut that was done today to Oxy, but my sort of plan going into the upcoming future is that while the market is trading off its high, right now we're trading around 15 to 20% off its high. If I go over to stock futures right now, let's go to my stock futures right here and open this in a new tab. The total market, I'm sorry for the blinding white here. The S&P 500 is down, futures down 2%, NASDAQ down 2%, Dow Jones basically down 2% there. So the market is fluctuating up and down on a daily basis. You're buying on those red days and you're getting a little bit of price recovery, and then it falls even faster and harder than it did on those gains. So you're basically just kind of standing a standstill. So while the market is trading off those highs, you want to be focusing on the total market, because instead of focusing on individual, you're kind of risking it and investing in the single stocks when you could be buying into these exchange traded funds that they actually have some sort of a bottom. Investors are more likely to target exchange traded funds. Your Roth IRAs, your IRAs, your 401ks, they're going into mutual funds, exchange traded funds, and individual stocks. Not everyone's going to invest at Carnival Cruise at $7 or $8. Not everyone's going to be buying General Electric or Ford or ExxonMobil or many of these other companies. So they may actually trend down for quite a while longer. And when the total market or the S&P 500 just begin to recover, these other holdings, they may not be recovering. And if you don't have a good outlook for these specific companies, you're going to be more likely to just kind of be a bit more stressed out, be a bit more worried, especially if you haven't been through a downturn. With a lot of investors out there haven't been through a recession where their portfolio drops by 40, 50, 60%. We really don't know where we will go in the next recession. So by investing in the S&P 500 or a similar fund, you know that eventually when the market and the total economy does recover, you'll see that recover in these exchange traded funds first, and then individual stocks, depending on their sector, depending on their industry, they will recover into the next cycles and such. So yeah, so kind of in my quote, my parentheses here, I know that there's still strong individual companies. I will still be investing and be invested in individual companies such as my McDonald's, my Clorox, my Johnson and Johnson's, my Procter and Gamble's, my very strong, solid dividend aristocrats that have tested and withstood all these past recessions. They have hiccuped, yes, during the recessions, but they always make a recovery just because they have such a strong moat. They have such strong financial fundamentals behind them. They may trend down in the short term with their earnings, but they quickly pick it back up as the market turns around, and whatever has caused the economy to sort of slow down and fall begins to subside. All these strong companies begin to kind of pick back up and actually recover sometimes even faster than the S&P 500. So I will definitely still be investing in my stronger individual companies, but they will not be the main focus of my equity moving into the total market while the market is off its highs. So here I posted a dividend cut that took place today. Oxy, an oil company that had grown and paid out dividends for, the article says 30 years. When I looked it up on dividend.com, it said 12 years. They had a 10% yield. It's not very unlikely that an oil company has a 10% yield. I believe Exxon has a 6 or 7% yield. So 7, 10%, not that far off. And guess what? They slashed their dividend from 79 cents per share each quarter down to 11 cents per share each quarter. That was a massive cut. So kind of posted a link there on the article. So this can take place in other industries and other companies here within the oil. It could happen to Exxon, it could happen to Chevron, Shell. It could also move into other areas that are weak, such as Carnival Cruise. You saw investors already discussing a possible dividend cut in Carnival Cruise. You don't want to be buying these individual companies because of their dividend. That's not your main focus. You want to look at their fundamentals. Are they able to withstand the next downturn? A lot of companies did not withstand the last downturn. The only reason that they're around right now is because they were bailed out. So, look to and such. So, some of my final thoughts here are when the market is down, I'll be buying at intervals of around 5 to 10%. I have about 10,000, not 10,000, but I guess I do have about $10,000 split between two different accounts that I will be averaging into between my wife's Roth IRA and my own Roth IRA. Dollar cost averaging is your friend here as the market does fall in intervals. Now, you may be falling here in a day of 5%, it'll recover 5%, but that's only a recovery of 2.5% of your total portfolio just because it takes double gain in order to recover the loss percentage. So always remember that. And yeah, you don't know really where the bottom is going to be at, but dollar cost averaging on a constant basis, week after week or month after month, by buying into the market, when it does finally recover, your portfolio will also begin to recover. And while it's very hard or impossible to time the bottom, just by dollar cost averaging, your portfolio will just kind of get the average price. So I kind of mentioned there's still companies that have not recovered from the last downturn, and they may or may not be bailed out this time. Good luck and have fun. And of course, as a disclaimer, I am not a financial advisor. The information provided is my opinion for entertainment and fun. So just sort of that were some of my quick thoughts here as far as the post here that I posted earlier today. I do have my own Facebook group called the FI Dividend Growth Investing. I do have to admit a bunch of people, but we have a good number of members, about 126 members now and growing. All I wanted to cover in today's video, I know it was kind of a random video, kind of going over into the post I had posted earlier in the day. I don't know if a lot of investors kind of seen my thoughts behind that, but I want to make a video kind of going into that. Going to be it for today's video. If you guys have enjoyed this video, definitely hit that thumbs up button below. Subscribe to the channel If you have not yet subscribed, I cover the stock market, dividends, personal finance, and such. And of course, if you have any questions at all going over anything in today's video, want to ask a question or anything, drop it into the comment section below. And always remember to smash that thumbs up button below. Thank you for tuning in. I will see you next time. Have a great day. Bye.